Well, we just finished the first quarter of the 2019 calendar year, and we're going to unpack today a little bit of the validation and also the accreditation statistics. I'm Rob Covino, and join me on Mirus Industry Analysis March edition. Well, average daily subsidy across the industry was up across all three cohorts. Leading that was the private operators, with the industry now at around 178 ADS. Occupancy also saw strong results across all three cohorts, with the industry now at about 91.5% of occupied beds full. The private operators are coming back and now sitting at 89% as well. With the increase of occupancy across all three cohorts, we are seeing claiming activities up across all three cohorts as well. With that, we have private operators making the biggest jump to nearly 10% of all claims submitted in the form to Medicare. But if we unpack that further into our voluntary act fee claiming, we have seen numbers a bit mixed, with the not-for-profits being steady over the March period at 2.7%, and the private operators with the biggest jump to about 3.5%. If we look at the percentage of total act fee claims, though, that are greater than 12 months, and also excluding the high claims, we have seen a retreat across all three segments, with the not-for-profit still sitting with the highest portion of their claims greater than 12 months at 36.6%. But the private operators are now at around 25% of all claims. We've linked this decline with the increase in occupancy for the period, but also during this period we have seen a number of discharges, which has suggested that a lot of this drop in the percentage of act fee claims has come from the transitioning of residents out of organizations, and with the new ones coming in to the organizations, driving up the overall average activity for Medicare claims. If we look further into the occupancy trends within the industry over the March segment, we have seen that with growing occupancy numbers, we are seeing a widening of the gap of the average rate of act fees versus the new average ADS. This suggests that, for instance, the private operators moved from about $21 in the February quarter up to $22, but with that increase, they have also added nearly a percentage point onto their average occupancy levels across the industry. If we look further into the occupancy trends within the industry over the March period, one of the measures we also look at is the average rate of act fees from incoming residents as well as the outgoing residents. And most providers work to keep that compressed to about a $20 a day variance. Over the March period, we did see the private operators grow the most at about $1.32, and that correlates nicely with the growth in occupancy, though, across all three segments. With the complex healthcare trends in for the March period, we've also seen a steady increase with the 4B procedures, with the private operators now at about 50% of all claims having a 4B claim attached to it within the Medicare data. And the tertiary care procedure 5 claims, which is again a representation of the acuity levels of our industry, was also up across all three segments, with the private operators sitting around 46%. With the workforce data for the period of March, we also saw a decline in both care and non-care related hours. Non-care related hours were down about 3.5% to 4%, with the care related hours also down about 1%. If we unpack further the care related hours, the enrolled nursing hours had the biggest jump, though, at about 10%. The RN hours declined, as well as the AIN hours, and allied health, which we've added for this period, has also declined by about 5% over the March period. And the biggest decline in the care-related hours came from the agency segment, which was down around 18% over the March period. And for the March segment, we wanted to unpack a bit more about some of the data we've collected from the department's website on the accreditation and validation statistics. If we turn our attention firstly to accreditations across the country, which we aggregate from the MyAgeCare websites, on historical record, there have been 130 sanctions ever issued by the department, and this goes back to 2003. Currently, there are 31 facilities sanctioned across the country, which represents about a quarter of sanctioned sites ever on historical record. And there are also a further 89 sites currently on notice. With these numbers, we are obviously in some unprecedented times with the agency. If you do have any concerns, please feel free to reach out to us and continue the conversation offline. If we unpack more also around the validation statistics, we can see from third quarter of 2016, the approach to validations has changed within our industry as well. This correlates also around the time where the listed operators published their first earnings for the first financial year of operations. Since then, we've seen the percentage of claims that have been reviewed being reduced. However, a higher percentage of claims that are being reclassified. The last data that we have is suggesting that with every claim the department is reviewing, about 50% of those are being reclassified by the industry. Again, if you have any queries or questions about the validation trends, as well as your own individual quality for the purposes of ACFI, please reach out to us, and we're glad to continue that conversation as well. And before we close off the March MIA edition, with the growing trend of occupancy across the industry, we are encouraging providers to have a look at their own CRM processes and their customer acquisition models. If they have any questions or would like to go through that, we have a self-diagnosis tool that's available on the link below. Please explore that and don't get left behind, but if you have any questions as well, please continue the conversation or reach out to us. I'm Robert Covino, and this is Mirus Industry Analysis March edition.